What are the frameworks, the few frameworks that you guys use on a day-to-day basis that it works for Sarwa at the moment?
I think we dropped so much, honestly. We from OKRs that we dropped.
You can put aside $100 every month. Which is the best way to invest it or to learn about the whole thing?
I think I think the best way is to.
Today, we're sitting down with the founder of Sarwa, the UAE first licensed fintech investment platform that making investment simple, accessible, and transparent for everyone. From spotting the gap in the market to pioneering regulatory changes, Mark shares how Sarwa disrupted the investment landscape, the challenges of building trust in a new industry, and how they continue to innovate in a competitive space. We will also dive into personal finance habit, investment strategies, and how Sarwa is helping the next generation of investors grow their wealth. Stay tuned. This one is packed with insights you don't want to miss. What is Sarwa?
So Sarwa, or Tharwa for the Arabic speakers, means wealth in Arabic, and it's one of the leading investment platforms that helps people invest and put their money to work. So before Sarwa, it was very difficult for you to invest. It's something that's intimidating, complicated. You had to have a very high minimum. And we saw that gap in around 2017, 2018, to help especially young people start to invest and not just earn money from their salary, but from their investments, whether it's ETFs or exchange traded funds, stocks. And more recently, we added a lot of additional assets like even gold, crypto, and many things.
And how did you get this light bulb moment to create such a product, especially here in the Middle East? And why did you decide that you were the perfect person to do it?
It started, as many things, like they started a bit as a rough idea and talking to friends, family, and my co-founders and we saw a gap where there was a lot of focus on like real estate or a lot of money just sitting in cash. When I was in Canada at the time, and there were a few fintech platforms that were starting to make investing easy. So I saw a bit of a big gap between when I would visit Lebanon and Dubai and when I would go back to Montreal. Then the second thing is whenever I did research a bit on the banking system, they didn't rank so well in client experience. So I thought that if there was going to be a solution to help people invest, it was going to be people from the Middle East that understand the market and love tech, love simple design, and can launch a simple intuitive app to solve it. So that gave me a bit of the confidence to feel like if we can get people from the industry, both financial services and technology, we would be very good at solving it.
Why did you choose this region in particular?
UAE is very stable, has been for a while. It has a lot of good things going for it. So very young population, very dynamic. When I was in Montreal, I was at Accenture actually. And I got pretty lucky because Accenture partnered with the financial center here to launch the first accelerator. And that accelerator was meant to change the regulations, work with the regulators to innovate, make things better, change policy. So that was actually almost like a ticket to invitation to come and start a business, start an investment firm from here.
And Sarwa was the first fintech license here.
Correct. It's the first fintech to be licensed under what was called the Innovation Testing License.
How did you guys do that? Tell me the full story.
The full story. Well, we moved here, and I think Jad and I were 25 at the time. Nadine joined us after. So they saw, they saw our like ambition, our dedication to what we wanted to do, to make investing easy, transparent. I think that resonated with a lot of people, including people in banking and the regulation and lawyers. So we got actually through this program a lot of exposure very early on, and I think everyone wanted like a win to show like, hey, we can put the OE on the map, we can change things. The regulators, sometimes they're portrayed as not wanting to change things, but on the contrary, they actually were very keen to help us and work with us to become the first fintech that's licensed. So I think that's how we pulled it off, just by the sheer amount of meeting people that aligned in our vision and saw that there is a gap to help people invest.
So did you guys work with the government to write those policies? Because we didn't have anything back then, or no?
Yeah, we did.
Oh, wow. Okay.
We had like almost a weekly meeting, actually, sometimes even more, where we would show simple things like, it takes a long time to open an account. You need the current process was requiring a lot of documentation. At the time, even AI now is a buzzword, but even at the time, there was selfie verification where we pioneered opening an account via a selfie to verify the identity of a person. So yeah, it was very much an iterative process to simplify the experience so that people can start investing. We would also do a lot of education, and we still do, where we invite people to learn how to invest, the 4 rules of investing, the mistakes. And I think that approach resonated with them, that saw that we are building good habits in personal finance that's going to benefit the community.
I know. So I've been using Sarwa for a long time. I haven't told you this before this podcast. I remember like 4 years ago when I opened my account, I played around with this. I think I invested a little bit, then I stopped. After like 2 or 3 days, a guy called me. He was like, "Hey, how's it going? What's up?" I was like, "Hey," I was like, "If you need any help," I was like, "No, I want to put money." I was like, "No, no, I'm just asking if you have any questions. I think we can help." And he didn't want to sell me anything. He just wanted to tell me more about the process. I was like, "That's freaking amazing." Yeah. So I think the customer service that you guys is really, really good. How did you think about this?
I think we found we you know we found that when we came here, there was a bit of that transactional sales nature,
Yes.
at least in that industry, where you would get a call from someone trying to sell you a plan, and we were quite shocked at how business was being done in that regard. So we wanted to. It was very natural for us to actually just have a service where people, you have wealth advisors that were at previous banks. We started hiring people that were serving 10 million plus accounts, but that now are serving people with much smaller amounts. And I think shifting from a product push to building wealth, educating people, went a very long way. And until today, I was just with the team now, ensuring like we continue doubling down on service, on relationship management. And most of our Google reviews repeat exactly what you're saying, even today, where I got a call with Akshay, Ayman, Faisal, Michael, and they're all just praising professionalism, service, client first, objectives. There's no there's no bonus if you sell this or that. I think it's a lot about the incentives, where if you don't have an incentive for that behavior, it won't naturally happen either.
That's true. I didn't feel like they were reading from a script, and I actually felt that they were trying to help me and explain to me things. It was a breath of fresh air.
Yeah, good.
But and after you guys became a success, there's a lot of companies start to pop up and try to compete with you. And how did you guys differentiate yourself from other companies?
We differentiated by mainly through innovation, I would say, by always keeping a very, so that what you're describing also gives us a very strong pulse on what people want. So with time, we were really able to launch new products and services that really were a hit. So for example, after COVID, we were a few years in, and then clients wanted to take a lot more control over their investing. They wanted to do things on their own. And we launched a self-directed service that we call Sarwa Trade. And even when Bitcoin was coming up and people wanted a bit of exposure, we pioneered like having a 5% allocation in one click. So these kind of things where we're constantly adding and having a good pulse on what people are asking us allowed us to differentiate compared to the rest, where Sarwa becomes a one platform where you can do a lot of, again, exposure to a lot of asset classes and not have to necessarily have too many apps.
So currently on Sarwa, I can go invest in ETFs, index funds, and I can select specific stocks, and I can
Correct.
buy gold and crypto.
Correct.
Anything else?
Even real estate, actually, like REITs, real estate investment trust is a way where you can invest in US or global, that includes UAE real estate, where you can get exposure to that asset class that's becoming more popular. So yeah, pretty much any asset class you can think of, even oil, there's going to be funds and strategies where you can figure out a way to do that.
So you mentioned about educating the investor, and we both from Lebanon. And back home, the way that we guarantee our future or the future of our kids is we buy gold. And even here and in Turkey, the only way where we think about investment is real estate. And how did you kind of approach this or educate the user? Hey, there's American stocks that you can invest in.
Yeah, I think we're still very early days, and I think there's a lot of awareness that we do, a lot of content, social media posts, webinar, like we hit it from every angle, one-on-one discussions. We educate the benefits of investing in the stock market is the returns already are very phenomenal. It's tough to beat, especially when you start to talk about the American stock market's track record. When you start to show the numbers and how it compares to other asset classes and diversifying, it speaks for itself. When you show what $10,000 would have became, sometimes you're talking north of like the last 10 years, around 13% average return per year. When you invest in the S&P 500, for example. So we show people the potential of investing compared to a saving account or even real estate. We did recently research where, like, over the last 10 years, the price of an apartment in Business Bay would have increased by 1%, despite what you think about UAE real estate and the hype. The data isn't as rosy as, and it's driven a lot by recent momentum. When we started, the last thing people wanted to talk about was UAE real estate. Actually, it was around 2018, and people were still barely recovering from the crash of in the early 2000s, and then so real estate was actually not that popular, at least in UAE. Now it's more popular because things have gone up, but it's cyclical, and I think the nice thing about investing in a diversified portfolio, you're a bit immune to these swings between one asset class and another. And I think people are now diversifying a lot.
Still want to talk about the early days of Sarwa. You mentioned that you guys hit marketing from different angles. I'm just wondering, what are the different channel of distribution that you guys tried, and which one like actually worked?
Yeah, we had a framework, I remember, that was very helpful from a book called Traction, and it identified like 19 channels. It sounds like
I love this book.
Yeah, it was very good. It was a good tip from Markati, actually, a Lebanese,
Okay.
that pointed me to it. And we started, Nadine especially started going after one channel after another, spending a couple of hours or a couple $100 just to see if it works out or not. Ultimately, we tried pretty much all channels. We landed at referrals being very strong, so incentivized referrals where customers get a benefit when they refer. That's something we have until today. PR was very good because we're a new brand and we have a lot of education and big message to spread to help people invest. So, and it's free, it's organic, it gets the message out there. Search engine marketing continued to be very powerful because people are searching about investing. Blogs also very good, where long form content where people go through a bit more on their own time about how to invest, like even Warren Buffett quotes, and there's many ways of learning that. Events, webinars, we continue to have like 100 plus attendees, sometimes thousands of registration when it's really a hit on a topic. We do in-person community events where just we get the community together.
Oh, wow.
So yeah, it's still
Do you
very
guys have a growth team?
diversified.
Do you have a growth team,
No,
or?
we've played a lot with the idea,
Okay.
but it's quite decent. It's quite shared between a few teams yet, and I think a lot of the team wants to chip in. That we haven't let go of that to create like a standalone team. But maybe one day it's something that we've talked about here and there.
Man, I'm gonna send this episode to John Ellis. He's one of the guests who was on the podcast. He created the growth hacking, the one that created the growth theme. But there's a lot of controversy about this topic, which is who owns growth, which is everyone owns growth, especially a B2C product like this.
Yeah, exactly. I think because we are building a product that we all use and love and are close to, ideas come from a bit from everywhere. And so you have a healthy amount of ideas. You have product that does a very good job at saying no for 99.99% of things. So you have a very strong filtering process. So it's worked so far, and but it's really credit to the DNA of the team that's been producing the results, that it's working. So why not? We haven't felt the need to dramatically change the way we work.
So usually the popular common advice, which is you have to analyze all the channel and do study the heck out of them and then eventually decide. But you guys are like, we have this 19 channels and we just test things out and see what sticks.
That's it. Exactly. And there's a few things that haven't, like in person, definitely deprioritized a lot, like, or trade shows, and Dubai doesn't lack any of them. So these are some of the things that initially we would go to, like JITEX, or these events that are like have a lot of traffic, but you end up saying, well, wait a minute, this is very much B2B rather than B2C. So we ruled out a few, but still quite a few that we're working on.
And how did you get like the first 100 customers or the first 1,000 customers? Was that used like SEO or like in person or reaching out?
I think a mix. In person was very key in the beginning, because
really?
you're having to tell people to trust you with their hard-earned money, and you're a new brand. Luckily we started in also in the DIFC that's very well respected, an area that's like luxurious. People loved coming to see us and, to meet in person. So I think it was a mix, but the in-person aspect was very critical. Now it's not, because, the brand is known and there's many ways of doing that. But initially it was key to meet in person, actually.
So by in person, people used to find about you guys on the website and they come to your office?
Yeah. We even had people like randomly just show up. Okay. Just to make sure, this is real. And you had these kind of funny situations in the earlier days.
Do you remember any of the stories?
Yeah, we do. I mean, you had people just drive from like very far and just to come to check us out. And we'd love to do that, because for us it was also a way to get to know what's on people's mind, what are they looking for, and filter a lot of the content to work on and educate people on investing in what we do.
And did you find those early conversation are important to shape into how are you guys going to build the features, what's important for the client, just like a customer research?
Yeah, exactly. Okay. Exactly.
And this is, so the way you reach out the first 100, 1,000 is like more, you did a lot of face-to-face.
Yeah, we would do like pizza nights on Tuesdays every 2 weeks, where we do a financial seminar. Okay. On some of the mistakes people make, like for example, the importance of starting to invest early and the magic of compounding, diversification, the importance of understanding what kind of fees you're paying and how much they can hurt your returns, the importance of managing your emotions in investing. So if there's a big market crash or a market or a bull market, how to react, how to manage those. We would have like long Q&A after, hang around. So I think all of that, and people would bring a +1. And then when COVID happened, we shifted all that to Zoom, and people loved like just tuning in. And until today, we kept, and the majority of our content is still online now. And the in-person is more of a community gathering and for people to get ideas from each other. But in the first 100, first 1,000, I would say, yeah, probably much slower. Or initially, we had to be patient just to build that trust before then it became more mainstream.
How do you balance having? Because I read somewhere that you're a conservative investor, you like to invest in ETF, compound investment, and you're an entrepreneur. This is like the most riskiest thing ever. How do you balance those two?
I think you mean like personally?
Yeah.
Yeah, I think as you said, like because to start a business is on the riskier side. I think in my personal side, it's more about well, I'm saying you're risk averse, but it's still predominantly almost 100% equity portfolio. So in some sense, it's a spectrum where you can always take on more risk, but I generally prefer a lot of diversification in my portfolio. So like 85% of it is diversified funds, and there's like a few I leave a bit into more speculative investments that I believe in, but in the majority, it's quite diversified. It gives me a bit of peace of mind to just focus on Sarwa and not spend too much time trading or investing.
And to quote Nassim Taleb, how are you preparing for the Black Swan events? So, God forbid, we had a pandemic happen, DeepSeek. I don't know where did you get this from? The market crash. How are you build this to mitigate in your portfolio?
I'm so happy you mentioned, because we're working with his team actually,
Really?
to launch a black swan protection. So Nassim Taleb is involved with a firm called Universa,
Yeah.
and we're working and announcing working with them very soon to basically allow, especially our bigger clients, to protect their portfolio against black swan events.
Right.
So let's say you have $100,000. You would put roughly $2,000 where you're protected against the market crashing minus 20% in a month. So it's for these big events. We're not protecting against some volatility, but these black swans, whether it's an '08 or a 2020, you're gonna be able, for certain customers that understand this product and qualify, will be able to add it as a bolt-on and protect against black swans. In the meantime, there are many other ways. Gold remains one of good hedges. Bonds, supposedly, I think they're still hedges, but not as powerful as a direct product for it. Short-term cash is an amazing hedge also for people that are long-term investors, but they want to leave some cash portion to take advantage of these market like buying opportunities also.
So many investors oscillate between short-term investment and long-term investment. And how do you manage people who are trying to play the market? And how do you do this inside of Sarwa? Or do you guys do any educating on this part?
I think, for the majority, we focus on the long term. That being said, people are like the short-term part. I think people are doing that on their own, and we're just providing like more insights and data and news to guide and things like that. But the more speculative area, we found that there's a lot more agency and decision making that wants to be taken by the client, and rather than they're not necessarily always looking for advice. We've seen a bit of both. Initially, we started with more of an advisory model, but the self-directed route and the brokerage route that we launched is actually picking up a lot more. So we're seeing more of a shift to people wanting to make their own decisions, whether it's short or long term. Time will tell. I think we're seeing both behavior, and that's a good thing. It's not, the performance is actually really good. We recently announced that clients have made more than $100 million on Sarwa. So
That's insane.
So I think the numbers also speak for themselves, because sometimes the media will portray retail investors as they're losing or they're not making money, and I think they sometimes confuse what's happening with some CFD platforms where they have a lot of leverage, and they can be harmful to actual just stock ownership and investing, and where clients it's their own money, so they're quite careful with it, as you can imagine.
So my brother last week was asking me about Forex. Should he get into it or not? What do you think about it?
No, absolutely not.
Why not? They can leverage like 200%.
Exactly.
That's why.
I think let him. I think the disclosures on these platforms, they tell you that sometimes 80%, 90% of their customers lose money, and they lose all of their money within a very short amount of time. So it's quite messed up. I don't think people truly understand what some of these 100, 200, whatever X leverage is doing to their portfolio. Like, if you've monitored any currency fluctuation, it's not moving dramatically. But just because of how levered you are, it tells you how much leverage is being added, and a lot of clients get wiped out very, very quickly. I think it's a dangerous product.
So I know this is not an investment show. I'm not gonna give investment advices, but let's say my brother asking me, he can put aside $100 every month. Which is the best way to invest it or to learn about the whole thing?
I think I think the best way is to have a diversified portfolio of ETFs, exchange traded funds, and whether he wants to do it on his own or get someone to help him, that's his own. But it's a proven strategy because you won't see these big swings typically day in day out. So you get exposed to the market and how it behaves without having to see these big swings that can scare you. And it's a very proven way to build long-term wealth.
So how much portfolio you should invest in Bitcoin or the weed market or whatever this big trendy things that's happening? Is like 20%, 50% of his portfolio, or
Um, you know, typically it depends. I think when it comes to Bitcoin specifically, um, now most of the wealth industry and asset management, even the CEO of BlackRock, like they'll mention like roughly a 5% allocation into it, unlike what you might see where people are going straight to
full
crypto
in?
and skipping stocks altogether. We like to have, typically what we're seeing from our customers is a bit of both. Our crypto volume, etc., will be closer to like when you look at the ETFs, etc., closer to 5-10%. Otherwise, the majority will be stocks. And there's a misconception. I think sometimes people feel like they need to go to Bitcoin to get these explosive returns. But if you look at the performance of the US stock market, like the last 2 years have been phenomenal. Both years, more than 20% in terms of performance. So that compounded has generated also a lot of wealth. And I think if that's on a very diversified basis across thousands of companies. There's still a lot of growth and a lot of opportunity to invest and make money in stocks as well. Of course, as you said, it's not investment advice, and you would need to dig deeper on a one-on-one basis how much you can take on risk. But there's merit to diversification.
Now back to Sarwa. For many years, I've met a lot of Sarwa employees, and they have a few things in common. They're very driven. They have a mission. We want to make something here in the Middle East. We want to be an example. How do you recruit for that, or is it like you bring regular people and you instill this in them?
No, we don't instill. They come ready made.
Oh wow!
Yeah. No, I think we hire a lot through referrals. If I think of if I think of our leadership team, actually, all of them were referrals or within a network or community that we knew. Of course, we also sometimes don't. Most of the times, we won't know the person, but we'll take our time to get to know them in the process. I think we like to also take a bet on people, and I think people really appreciate the ownership that this brings to want to prove out, to build a function, and to take on the challenge and like from scratch. We've tried sometimes to like hire like someone that's done this before from the industry. That didn't really work out well for
Really?
us. Versus someone that's that's more new to the field but has the right mindset, attitude.
And any story you can share on this?
Which part?
Where you hired someone like from the industry, you have done that, been there, but eventually either he wasn't really a cultural fit.
It's exactly, it's a culture fit sometimes where you mentioned how we have a very service oriented culture. We played with the idea of what if we have someone from more of a sales background, brokerage background that will help us also scale that, and it lasted like 2 to 3 weeks before we were like, that's a big shift. So yeah, it usually doesn't last too long. I think we have a very good process. We've also defined what are like our values, and I think once we've done that, the process becomes better. I think we got better a lot at also filtering, and once you also have more people, it becomes much easier to then explain what the culture is. So we have, for example, ownership, positivity, Trust is another big one, and the growth mindset.
Sarwa recently became profitable. This is a big milestone in any startup. How did this affected your decision making into hiring, into growth?
Um, I think it gave us. It was very freeing, of course. So we celebrated like our first quarter and then first year. I think it made us more confident in in not just running this as a technology company, but as a sustainable, profitable company. I wouldn't say it. I think yeah, it's maybe refined more our to be even more stringent when it comes to spending. Because sometimes when you have a lot of capital, you become less risk averse, and I think being profitable gives you more appreciation to be more disciplined with cash, whether it's marketing, whether it's hiring. So we went back a lot to our roots in the earlier days, where still as small as possible, valuing being a small team, and marketing wise, I think we've adjusted when the markets are just getting a pulse on the market to vary our marketing spend accordingly. So, for example, now we have billboards going on, and we feel like we're being much more aggressive on marketing because of the recent results. We will adjust as we need to, um, depending on that, rather than the growth at all cost mindset sometimes of the venture capital industry.
Do you remember that moment when you guys became profitable and how did you guys celebrate?
I think we had well, we usually actually the celebration happens around the end of year, where we look at all the metrics, and we have Liz on our team that always gets balloons that maps to
Shout out
some
to Liz.
metric. Yeah.
Nice.
So no, we celebrate. We have like an end of year where we celebrate the year. And yeah, I think it's now once you have it, it's a continuing process to push it even further.
So you mentioned metrics. What do you think about management with metrics, OKRs?
Not for it. Something we've tried for a couple of quarters. The feeling we got after a while is like we knew exactly what we wanted to work on, yet we had to go through this process to justify it, and it was quite cumbersome. So we actually experimented with a lot of frameworks, but ultimately felt like we cut out a lot of management time. Like anything that's in the realm of, especially in the realm of planning meetings that take up so many resources. We used to get the company together and do different teams and things like that. And in our at least for Sarwa, it didn't really work. We didn't feel like um, it was worth the amount of effort required, not just to come up with the objectives, but then to track them and the follow through. And we felt like, oh, we're never doing enough and having to catch up to this framework. So it was just adding a lot of work that was distracting us from what we actually knew we needed to do.
Usually, when companies reach a certain scale, they start to have meetings about meetings.
Yes.
And how did you personally make sure that no, we're gonna stay nimble, we're gonna stay lean, we're a startup here?
I think we got there, and I started to like lose sight of the culture and ways of working that we had. So we had like a management meeting, and then you had the OKRs, and then you had the strategy meeting, and then you had your board meeting,
Absolutely. All of them important.
and then you have your one-on-ones, and then you had your performance reviews, which is quite insane. I think it was one day we were going through all of that, and I met a client who's an influencer, and he did very well for himself, and I think he didn't have any meeting that week, and he just posted a video that he shot 3 months ago, and I was like, I laughed at the difference between our weeks and our productivity, but the impact each one had. But anyways, I think it came from like being sick of all of these meetings and realizing they're not really working for us, that we canceled everything actually.
What are the things that you tried and didn't work? What are the things that you failed? And What are the frameworks, the few frameworks that you guys use on a day-to-day basis that it works for Sarwa at the moment?
I think we dropped so much, honestly. We from OKRs that we dropped, then um, we took a very, very light approach. Like even one-on-ones, I think we removed, and I've seen a few company also do that. Like anything that's pre-scheduled.
Brian Chesky currently at the Airbnb, currently mentioned that.
Yeah, so I think we canceled everything, and then the approach we did actually is, let's see what we're going to miss, or what's going to break from canceling every single meeting.
Oh wow, that's very drastic, no?
Yeah, but it was, we needed a way to just understand what is not working. And I think the first thing that started to come up is the team meeting, and people are like, hey, I think it's been a while we didn't get together.
Okay.
So we're like, okay, great, let's get together and align and see what everyone's up to, and just do that. And then we naturally moved to meet like monthly, more or less. So yeah, we had to go through a process of just removing everything and adding back only what we really felt was needed.
And what happened to this one-on-one meetings? Do you guys still do them, or like on a need-to-need basis?
It's on a need basis also.
Oh wow.
Yeah. And I think, was it NVIDIA? The CEO spoke about that as well, where he has like more than 16, like some crazy number of direct reports, and he doesn't, obviously, to make it work, to stay pretty flat, you can't afford to have one-on-ones on a weekly basis.
Man, 5 years from now, what does success look like for Sarwa?
I think, yeah, continuing to be the leader in investing, where people, where the primary money relationship for people across asset classes, announcing even bigger gains for our customers.
100 million is insane.
Yeah,
Man.
I think, moving into the billion and then hopefully trillion one day.
Let's go.
Yeah, so.
And where can our clients can start and actually start investing? We're gonna have the link for Sarwa on our website. Do you have any resources if the new investor, they want to start learning about investment as well?
Yeah, of course. I think we have a blog that's very up to date, and there's a lot of resources there. We often do, like, usually once every 2 weeks, we do a webinar on how to learn how to invest, and it's quite varied in terms of topics, but usually it caters to both beginners or also advanced investors that can refresh some concepts. Yeah, and then once someone signs up, they're gonna get an email marketing automation with like what we believe is some of the most important concepts to learn. There's chat also, obviously, where they can ask more questions. It's a mix of AI and human support, and yeah, I think that's more than enough without overwhelming someone. But the importance is to get started and learn. It's one of those things where you need to learn on the job and by actually investing, rather than like overdoing it. It's better to start investing even if it's not your perfect investment than to start 5-10 years later and to have missed out on the potential gains.